Hi, and welcome to the Stock Scores Market Minutes for July 23rd, 2018. Before I get into this week's market analysis, I want to talk about this idea which I'm referring to as Matryoshka Trends. Now, a Matryoshka doll is one of those wooden dolls where the small one fits into a larger one and that one fits into a larger one, yet again, often called a Russian nesting doll. This concept is applicable to trends as well, because you can have a primary trend that could be up, but along the way, there will be secondary trends that could be counter to the primary trend. You know, the weekly trend could be up, but on the daily chart, you could have a downward trend. And then on the 30-minute chart, you could have an upward trend within the downward trend on the daily, which is within the upward trend on the weekly. Now, which trend you trade depends on how active of a trader you are. If you're day trading, obviously the trend on the 2-minute or the 13-minute chart is more important than the trend on the weekly chart. And so not recognizing the secondary trend may get you whipsawed out of a good position. You may look at the daily chart and say, I want to be a buyer because the trend is up, not realizing that the shorter term intraday trend has been moving lower for the last 3 days, and that may get you whipsawed out of a position. A little bit easier as always when we look at a chart, and here is a chart of the oil market, and you can see that for the last year or so the oil market has been in an upward trend, and that would mean I was generally bullish. However, if you were a buyer 3 weeks ago of oil or oil stocks, you're probably feeling frustrated because over that time the trend on the daily chart has been down. You see the market was overbought, it was up near the top of the upward sloping channel. And so even though the trend on the weekly was strong, we were overbought and that corrected downward. We can also then look to the even shorter term chart and see gyrations within that. This is the 10-day, 30-minute chart, the last 10 days. And we had upward move, downward move, another downward move, an upward move, a sideways move. And so if you're much more short-term focused, you would maybe have gotten in and out many times in the last week, whereas a medium-term trader might have been short the oil market, while the long-term trader looking at the weekly chart has simply stayed long of oil. So make sure you understand the trend that you are trading, because it will have an effect on where you get in and out as the market cycles up and down on those secondary trends. All right, let's get into this week's analysis of the S&P 500, and I always try to show 2 time frames for these major market indexes just to give you a sense of where things are. So on the shorter term time frame, the 30-day, 60-minute chart, we are in an upward trend. Now the upward trend was broken on Thursday. Does not mean it is destined to go lower. It could simply mean that we're going to go sideways. And we are at that resistance. We actually broke through that resistance and then kind of came back this week. And so it just looks like the market is grinding its way sideways, waiting to figure out what's going to go on with the US tariffs on trade. Now looking at the longer term chart of that market, you can see the weekly chart remains in a long-term upward trend. Now it has been in a long-term upward trend for a number of years. It went parabolic, got overbought, we corrected back to the trend line, and now we're kind of bouncing along that trend line again, just like we had for the previous 2 years. It was only this real ascent higher on the US tax cuts that made the market go parabolic. Then it corrected on trade fears, and now we're sort of trending along that line again. Onto the Russell 2000, which is the US small cap market. This is the daily chart. We are in an upward trend, but we are compressing our volatility. You can see the volatility is more on the left side of the pattern than on the right. That means investors were uncertain here. They're building confidence here. And what we look for now is a break out of this pattern. Because the trend into the pennant was up, we should expect that the trend out of the pennant will be up, but it hasn't happened yet. So watch for a break to the upside. Alternatively, we could get a break to the downside. That would be a break of the upward trend line and likely mean that there is a further move lower in the near future. So watch for that break, because we are compressing in volatility, and the break will tell us the next leg of the trend. Onto the onto the Canadian market, and this the shorter term TSX chart. You can see that generally we've been moving higher, but in the last 2 weeks we're pretty much just going sideways. We bounce around in these ranges. We're at the bottom of the range where the market should bounce, but it tickled through support on Friday, so a little worrisome there. Keep an eye on that. If we start to break down through these support zones, we may start to roll over and give up some of those recent gains. However, keep in mind that the longer term chart had a recent breakout through resistance, and so really we should be continuing higher. We may take a couple of weeks to build a base and then launch off of it, but the trend on the weekly chart is up. We've recently broken through resistance, so that should mean that the Canadian market moves higher. Not the same case on the Canadian venture market, which is in that downward trend. We've talked about this for a number of weeks as this market has been moving lower, and generally speaking, I think you want to avoid the TSX venture market. On to treasuries, which is of course our proxy for interest rates, and we had a nice little rise up for the last 2 or 3 months. But last week, we broke that upward trend line. This is the weekly chart here. And that means that the treasury bond market likely to go lower, and that means interest rates likely to move back up again. We probably will not see a lot of downside on bond prices, which means not a lot of upside on interest rates. But looking at that long-term chart, we essentially rose up to the downward trend line and got stuck. And that is what we expect to have happen. You run away from the trend and you come back to it. Now that we've hit the trend line, we're rolling over and we'll probably retest those lows, which means interest rates going up in the next few weeks, most likely. US dollar has been choppy sideways trading after a real good run higher. Question is it going to break out of this range to the upside, or is it going to break out to the downside? Until it makes its break, I wouldn't try to be too predictive with where it is going to go. It did try to break out last week and failed. You can see there's a tall tail there on that candle. That means prices for the US dollar went up, and then by the end of the week they had fallen back down, and that's basically a signal that the market keeping the US dollar in that sideways trading range. That has, of course, not helping gold, because strength in the US dollar means gold is weak. We are going into gold buying season, but until I see some break of this downward trend line on the gold chart, I wouldn't get too optimistic about buying gold, or gold stocks for that matter. There is some support here, but we've been plowing through different support levels along the way. Nothing seems to hold it back. This time, however, we did touch the support and rallied back a little bit to close off of the lows for the week. A little glimmer of hope perhaps, but again, until that downward trend line can be broken with an upside move, I would stay away from gold and gold stocks. And back to the oil chart, which we showed earlier. Again, in a long-term upward trend, we've had a couple of weeks of weakness as the price for oil comes back to the trend line. Could see another week of weakness before it really touches the trend line. But soon we would expect that that trend line will be touched, finding support, bouncing off of that, and moving higher. That's what happens 70% of the time in an upward trend. Of course, eventually you will get a break of the upward trend line. Sure, that could happen next week as well. Not the likely outcome because we have good upward momentum, but a possibility that we always want to watch for. And finally, the fear chart, which is continuing to stay relatively low, but certainly not as low as it was. There's still some element of concern about markets, and we've had these spikes in fear many times in the last year. But for now, fear very low relative to where it's been for this year, but still elevated relative to where it was back in 2017. So my ratings then, I remain bullish on US stocks on both timeframes, bullish on Canadian stocks on both timeframes. They are taking a little bit of a break right now, building a base, but that could change any week. So perhaps next week we'll break out of that range. Gold, bearish on both timeframes. Oil, bullish long-term, but neutral short-term as we pull back to the upward trend line. Stocks spent most of the week in a holding pattern, waiting for more information on the US trade tariffs. The trend is up, and investors seem willing to shrug off a lot of bad news. We've seen that. Bad news comes out, you get a week open, and then the market comes back to close relatively flat for the day. Canadian stocks remain in an upward trend. Oil's pullback has not yet broken the long-term upward trend, so it stays bullish. Gold, ugly. Fear is stable. All right, let's look at the trade of the week. And on Friday, because the market opened with weakness and was really starting to move a little bit in a downward trend on the short-term chart, I was more inclined to short stocks on the open, and this is one that I did short on the open, shorting it with my action candle on the open. I often show bullish action candles. If you see there, there's kind of a gray dot. That is a bearish action candle. It's my key indicator for entering day trades. Well, really for entering all trades, but when looking at it on the 2-minute chart, I'm using that indicator to enter shorts on a 2-minute time frame. And in this case, it paid a very nice reward for risk of 8 RR by the end of the day. It was the best trade that I entered on Friday, and really paid nicely to trade with the trend of the market. And that, I guess, is the aim of this week's video, is the trend in the very short term was negative, even though the long-term outlook for the S&P 500 is bullish on, you know, the weekly time frame and even the 30-minute time frame. But on the 13-minute time frame, it is bearish, and so I was short of stocks almost entirely on Friday and ended up having a good day because I was trading with the trend of the market. Well, that has been the Stock Scores Market Minutes for July 23rd, 2018. If you like the video, click on that like button, subscribe to the channel, and you'll get instant updates if you click on the little alarm button after you subscribe. And most importantly, trade well.